expectation in the market was between about 80%, 90% on for a rate cut in March. In the past day or so, that probability's collapsed to 30% now that we're going to get a rate cut. People who are going to be coming off fixed rate mortgages are going to suddenly see that they're not getting as good deals as they might have been when they were shopping around a week or two ago. This is the real world impact of this crisis.
I'm remortgaging later on this year. I'm banking on or hoping that there will be a market reduction of what I'm paying in interest rates. Right now, I'm reevaluating that plan, because who knows what the impact of this could be.
Mortgage holders are going to feel the pain. And it's crazy because it's, how can a crisis thousands of miles away mean that I have to pay more for my mortgage? This is how the world works. Hello, everybody. Welcome to the Mouthy Money podcast. I am joined as ever by my good co-host, Chris Tuite, who is Head of Consumer Finance at communications consultancy MRM. I am Edmund Greaves, the editor of Mouthy Money. Hello, Chris. How are you doing?
I'm all right. Thanks, Ed. How are you?
Yes, getting a little bit worried. I think things are going on in the world at the moment, and that's what we're here to talk about today. Now, obviously, we are not a geopolitics podcast. We are a money podcast, but sometimes there are things going on out there in the world that are simply too big to ignore. Chris, what is the, should we call it an elephant in the room and just get it straight in the open?
Yeah, I mean, it's the ongoing conflict between the US and Israel and Iran and lots of other combatants, whether willing or unwilling, it seems, are being sort of pulled into this.
Obviously, what we're interested in here is the conflict has a lot of implications, a lot of human implications. I think what was really interesting there, Chris, that you mentioned is that it's not just these kind of three key countries being pulled into this. And obviously Iran has a lot of oil, but how much of an effect that has on the kind of global economy, I think, is perhaps limited. But these other countries are possibly the ones that now potentially really matter for our wallets and for our investments. Because when you look at a country like Qatar that has been drawn into this, Qatar produces about 1/3 of the world's liquefied natural gas. It's not currently exporting any of it. And that has sent the price of kind of global gas prices absolutely balmy, I think is probably the best word for it, in the past couple of days. But the thing is, we've been here before with this. It happened with the Ukraine war in 2022. It took years to sort of get over that. We're still feeling the effects of it. Now, we're just in the first few days of this, but the potential implications are possibly just as scary in financial terms. Now, a lot of the time, things that politicians and governments and states and all these sorts of things don't make huge amounts of difference to our everyday lives. But this is something that unfortunately does have implications for our everyday lives. So we're going to be looking at that today in a few different areas. We're going to start off looking a little bit at the investing side of things. Then we're going to look at obviously energy bills, but actually by extension, the implication of that for interest rates and therefore mortgages, because that's really important here, is mortgages are potentially going to be impacted if this conflict drags on. Chris, let's start with investing though. What is your experience of what's going on? I will say at this point that I haven't looked at any of my portfolios.
It's probably the right thing to do, Ed. Yeah.
Real head in the sand guy over here.
Wait it out. It's not bad. It's not a bad strategy. Cost of living crisis too. It's back and it's badder than ever. I think we'll see. Time will tell. But my investing portfolio, I had a little look at close of business, although obviously it's global stock markets. But you know, when they give me an update on my Hargreaves Lansdown app last night, and I had lost the equivalent of £450 off my portfolio, which is just under 1%. Of what's in that particular thing. So there were other sort of losses off my my girls' JISAs. So you know, it's never pleasant to see that. I have to say, my first reaction wasn't panic. It's not the first time that I've seen those kind of figures coming off. I've seen more than that coming off actually. And as we touched on before, I'm in it for the long haul when it comes to my pension. Obviously, I mean, with the very nature of it means that I am. So. A bit like you, I'm not going to stick my head in the sand. I want to see what's going on, but you know, it's like, well, there's not a huge amount I can do about it, and I've taken some long-term positions on it. So, while it's never pleasant, not panicking at this stage about where that number finds itself. And I'm quietly confident that over a long enough period of time that it will pull itself back up to parity and then beyond, which is what was my experience of what happened in Ukraine, experience of COVID in other places. So yeah, not panicked, but watching closely for all the other reasons that I think we're going to come on to it.
I think we're really interested to hear from anybody who's kind of keeping one eye on their portfolios at the moment, be it investments through stocks and shares, ISAs, or pensions, whatever it might be, whether they've seen an impact, whether they're worried about it, whether it kind of keep calm and carry on. I mean, that's kind of my view of it at the moment is the stock market. If you look at all of these things that Chris, you've mentioned there, that have been big issues in the past few years, largely speaking, it's been water off a duck's back. The markets get on with it. If anything, it's been a bit of a distraction away from the kind of bubbling concern about AI has been a big issue in the past few weeks, and that's kind of been completely cleared off everybody's agenda now because we're all paying attention to this other thing. Everybody, the stock market, investors, all these commentators, the media love a good narrative. I know we talk about that, the importance of narratives. And it's almost like cleaning the slate, cleaning the palette a little bit, maybe, of the AI worries. Everybody's got something else to be concerned about now. But yeah, I think it's interesting. We'll see what happens, and it's going to impact people's portfolios in different ways, isn't it? Because, like we mentioned, the energy point is so important there. Oil price is shooting up. What are the implications for that? And the cost of living implications for that are really, really important. We had the latest spring statement today from the government, and it already seemed like it was out of date.
Couldn't be more out of date, could it? It was just events, dear boy, events. Isn't that what someone once said?
Those figures tend to be a little bit optimistic, or they never quite get them right anyway. But it seemed a little bit ludicrous, the whole thing, when the world has changed markedly since that stuff was put down on paper, even just a few days ago. So we'll see what the impact is. And I think the important message here is that people need to remain calm. If you have a long-term plan with your investments, stay with that plan unless it really looks like it's being severely disrupted by this change in events. It shouldn't be, because we should all be well diversified and investing over very long time horizons. I know I am, Chris. Obviously, we don't give out financial advice on this podcast. That's very important to point out. I like to talk about our own experiences, though. Now, on that cost of living point, this is where things get interesting, right? And where people in the UK, beyond that sort of investment and bigger market picture, are potentially going to see some issues moving forward. And this is why the spring statement is looking a little bit out of date already, because the important implication there is the change in energy prices and how long that sticks for, right? That's a big issue, isn't it, Chris?
Yeah, we thought we'd slayed it certainly felt to me anyway. There was talk, wasn't there, the price cap was coming down. That was mentioned a couple of weeks ago from the regulator Ofgem. So we were looking like, okay, bills might be becoming more manageable. I think it was just last week someone was saying that off the average bill there was something north of £100 coming off. So that was like, well, direction of travel is heading back to where it needs to be. Inflation settling down towards the 2% target that's set by the Bank of England. And then what you get is obviously huge geopolitical disturbance with this, which impacts distribution pipelines. And you mentioned that the big thing there, I think, on the energy side of things, obviously oil price has gone up. We've seen that before. But that liquid natural gas that Qatar supplies the UK with is massively important. I think Ed Conway at Sky did a really good breakdown of this, but you've got the kind of Strait of Hormuz, which is stopping shipping from going through that tiny little narrow area, which I'm sure people have seen. And then you've got the Red Sea on the other side where, there's potential for pinch points there as well, which could reduce supply. So, and the UK is increasingly reliant on liquid natural gas from the likes of Qatar. So I know we get some from the North Sea at the moment in the United Kingdom, and then from other sources, but it's a big chunk of it, and it's only getting larger. So that does mean that there's already upward pressure on prices as that sort of supply line is cut temporarily. And that does mean that that's going to feed through into inflationary pressures on those, and that will then feed through into the wider picture, which then has another impact on what the Bank of England does when it meets about how to tame it. If we do see ourselves going to a second type of cost of living issue with energy prices kicking that off.
Yeah, and I think that's the really important point here. So we have to try and draw the line of connection between, well, energy prices going up, what are the implications of that? Obviously, energy bills going up is the first significant potential implication of that. We don't know today how much of an effect what is going on right now is going to impact in 3 months when the Ofgem next sets its price cap, when it makes that change. It could be that things are diffused, stuff opens up, there's a bit of a blip in supply, but things normalize and calm down. I remember during the pandemic, there was that crazy moment at one point when the price of oil went effectively negative because suddenly the world was shutting down. All of this oil was arriving in oil terminals and there was no storage space for it. So basically the price inverted in order to get rid of all this excess supply. But it lasted a very short period of time. This stuff can pass through really quickly, but we don't know whether it will or not. And you made the point about the Bank of England there, Chris, and I think that's a really important point because up until Friday, we had been on that kind of glide path down of interest rates coming down. We had a pause at the last decision by the MPC, but the expectation in the market was between about 80%, 90% on for a rate cut in March. In the past day or so, that probability's collapsed to 30% now that we're going to get a rate cut. Today, some data from Moneyfacts came out. What are called swap rates have bounced. So swap rates are basically the way that mortgage providers price their products. So if those swap rates are spiking upwards on the back of higher interest rate expectations, then that means purely that people who are going to be coming off fixed rate mortgages are going to suddenly see that they're not getting as good deals as they might have been when they were shopping around a week or two ago. This is the real world impact of this crisis. Mortgage holders are going to feel the pain. And it's crazy because it's sort of like, well, how can a crisis thousands of miles away mean that I have to pay more for my mortgage? This is how the world works, right? This is the crazy thing. And this is why paying attention to this stuff is unfortunately necessary now, because it will have a real world impact on what is happening in your wallet. We've talked in past episodes. People increasingly just want to know what's going to impact them. This is the effect. This is what happens. And I don't think that can be understated, right, Chris?
No, I don't. We're so interdependent with all these other things, and the nature of our lives and all the things we've become accustomed to means that we live in this increasingly globalized system. There has been, threats to that recently in terms of some of the rhetoric that's coming out of various political areas, and there's more global instability. And with more instability means that those supply lines are threatened, as we touched on with the gas, and that can have a major impact on what's available when, what it costs, and then that plays through into how we power our own lives. We all need gas to heat our homes, to cook our food. For many of us, we need oil to drive our cars, buses, whatever it may be. So no one is really insulated from this globally. And that's why there's so much global attention on these things and why they're so critically important. And as you said, having a plan is absolutely crucial. We've got a long-term plan, which we're sticking to. We touched on at the top of this, which is we're not going to panic, but also in the short term, I'm banking on, I'm remortgaging later on this year. I'm banking on or hoping that there will be a market reduction of what I'm paying in interest rates. Right now, I'm reevaluating that plan, because who knows what the impact of this could be, who knows how long it will last, and who knows what the tail end of it could be as well. So just when things stop, things don't necessarily go immediately back to normal, as we've seen with Ukraine in terms of the shock that happened there and how long it's taken to settle down towards something that we would previously have called normality. I think this idea of a normality is probably, to borrow one of your phrases, Ed, for the birds at the moment. I think it's just, you got to play the pitch, whatever it looks like, whenever you wake up every morning, and stick to your long-term plan, stick to your long-term principles, but be aware there might be some detours along the way. That's kind of how I'm feeling at the moment.
Yeah, absolutely. I think there's so much that's unknown out there. I think it just kind of reinforces the need to have that plan in place for your money, for your long-term, the long-term success of your financial plans, no matter what happens out there. I think the implications are potentially vast, but it's also easy to catastrophize within that. And, I was doing it at the weekend. doom scrolling, looking at what was going on and what was happening where and why and all this sort of stuff. It's very easy to get sucked into it. Or you could just go on and try and live your life, not look at your investment portfolio and just assume that the plan you have in place is the best one you've got for the situation as it may change. I think we'll see if there's some sort of reaction in the summer. I wouldn't be surprised if the energy stuff really does become a big problem. I wouldn't be surprised if we see maybe an emergency budget or something like that. It happened with Ukraine. We had this is what brought down basically an entire conservative government, was the energy price spike and the energy price guarantee that then had to come in after that and all this sort of stuff. And look, we live in politically volatile times. There's a lot happening. But the governments just have to react to that and try to make the best of what they've got. But you've got to just stay on top of your own finances too. Chris, what is your takeaway? What are you going to go and do today? Now, what is your first action?
Well, I'm concerned about the swap rates thing you mentioned there. I mean, we touched on it before in previous episodes, but, swap rates essentially major driver of how mortgage lenders price mortgages for us, those of us who are lucky enough to have one. So I think I'll be keeping an eye on what they do and whether there's that sort of return to a calmer state. The other thing is, like you say, we've got interest rate, Bank of England base rate decision on the 19th. That was pretty much a shoe-in, as you said, for a cut. And now I think we'll probably have to wait till later on in the year. It feels like I've been waiting for an eternity for this, for these rates to come back down to something that we're more accustomed to before the cost of living crisis. And it may be that we have to wait a bit longer. But, hopefully that will continue its downward trend. So I'm looking at that. I am looking at my investment portfolio. I'm just interested just to see how markets reacted. I think, obviously we talk on here, so I want to have an understanding around that. But also, I think it's just good to sort of understand. It's helped me not to panic looking at it in previous crises, if you like, where you see it and you go, okay, well, this has gone into the red somewhat. I've lost a bit. And then you look back over the long term, I think where you're still up quite considerably to where you would have been if you'd taken a different approach with, say, just investing, keeping my money in cash or something else like that. So, I am keeping an eye on that. And making sure that I'm sort of mindful of what those swings look like for the future. But yeah, I think other than that, it's just watch and wait out and try and learn a bit more about what all of this interconnected world looks like, because sometimes has been so smooth in terms of the way that it's, the way that gas is put into our home. We don't necessarily know where it comes from or where it's piped through, all those kind of things. And the more I understand those things, the more perhaps I can make my plan tweak my plan as I go along to take account of some of those things, and keep some of that stuff on the back burner, not to use too much of a crass gas pun. So I think just watching and waiting really and seeing what will happen. I think the major thing for me is that mortgage thing. That feels like that's coming up soon. Like I will be, as of April, able to start looking around at other deals, because you can look 6 months in advance, right? And that will be a really interesting time to see what kind of direction of travel we're in. So yeah, in the time before that, when those prices are initially going to start, then I need to have a think about what swap rates are doing, what the base rate's doing, where that's likely to go, and then plan for the next 2, 3 or 5 years accordingly. What about you, Ed?
I'm going full prepper. Solar panels on the roof, wind turbine in the garden, more gold buried in the garden too.
Not in the same spot, I hope.
No, different spot. I'll try and avoid.
Spot. How big's your garden?
Not that big, unfortunately. Might have to branch out.
Half a day's digging and I'll find it. I reckon.
It'll be like one of those things where the archaeologist finds it in 1,000 years, and it's like, oh, look at all these King Charles pound coins. What a find!
Aren't they made of tin now or something though? Didn't the Bank of England reduce the amount of gold in them?
Not the ones I buy, Chris.
Oh, I see. Not the Krugerrands or whatever. Yeah. Okay. Yeah. Okay.
No, look, my plan at the moment is to do nothing. I'm still sitting on a 5-year fix, which is still running on until the middle of next year. So, tough life being a 5-year fixer, Chris. I'm more interested in what's going on in investing at the moment. I think it has, implications. But again, I'm not going to be making any moves on it. I did actually put an instruction on my son's junior ISA on Friday afternoon, which would have cleared on probably Monday.
Okay.
I haven't checked what that's done.
What was the instruction, just to get it underway?
I transferred my junior ISA from one provider to another, and I had to reinvest the portfolio. So I decided to do it at the exact moment that the Iran crisis erupted.
Oh no!
So yeah, fun times.
So was that a buying opportunity, or was that catching a fall? What's the phrase? Catching a fall?
Well, I think I bought just as everybody was selling. So either that's a good thing or a bad thing. I'm not quite sure. I need to check.
Well, let's fingers crossed. Fingers
But
crossed.
look, it's a regular investment portfolio, so hopefully that will be smoothed out over time anyway. So we'll see.
I mean, we are talking here from our very comfy position in midlife. I think if we were coming up to retirement and looking at this, and there was 1% being wiped off, I think that's a whole different conversation, right? And people do need to be on top of it, and maybe seeking financial advice about what to do and that kind of stuff. So we're in the middle of our journeys, and if you're at the start of your journey, this might even be a buying opportunity. You might be able to get some bargains. But if you're towards the end of that, heading up towards retirement, Ed, right, it's probably a little bit more of a stressful time, really.
Yeah. I shall leave it on those sage words of wisdom, Chris. Do let us know if you're concerned about either your investments, or maybe you're looking at your remortgage, or even getting on the ladder for the first time and suddenly concerned about the deals. We'd love to hear from you. So please do leave a comment, like and subscribe. The video really helps the channel. We do appreciate the support. With that, thank you, Chris.
My pleasure.
And thank you, everybody, for tuning in. We shall see you all again very soon. Thank you and goodbye.